And good afternoon. Welcome into Market Talk for Tuesday, January 12th, 2021. Happy New Year. I'm your host, Jesse Allen. Great to have you here with us. MarketTalkAg.com. That's our home on the web. You can find us there as well as Facebook, Twitter, and Instagram. Just search the handle at Market Talk Ag. You'll be able to find us on all your favorite social media, all of your favorite podcasts and streaming sources, of course, Spotify, Apple Podcasts, Amazon Music, SoundCloud, Stitcher, so many more, all of our great radio partners across the country from Texas up to the Dakotas. We appreciate all of them being on board with Market Talk as well. Well, what a day we had in grains. The highly anticipated USDA reports released, and we saw a very bullish reaction to those reports. Let's bring in our guest today, Jim McCormick with agmarket.net. Jim, great to have you back on Market Talk, my friend.
Thank you for having me on, Jesse, and thank you for having me on a day that, holy cow, what a day in the markets, what a day for agriculture.
Yeah, I think that's obviously the sentiment that everybody's sharing after today, Jim. And just overall, looking at this report, we got some of the surprises, specifically in corn. We got also soybeans came in right around where we expected, but they shot higher as well. What is just your overall initial reaction to the reports and how this played into the market trade today?
Well, I think what's really interesting, Jesse, is you're right. The average trade guess for the corn carryout was 1.6 billion. Our team was thinking it's going to be closer to 1.5 billion. It ended up splitting it right down to 1.55 billion. And with that, the fact is we're limited up in the corn today on that news. And we rallied 70 cents into the report. So I think it really kind of caught people off guard of, holy cow, what is so bullish about this with a miss of only about 50 million bushels? Well, what's bullish about it is how they got there. Part of it was they lowered the quarterly grain stock report, which is friendly. On top of it, they lowered the production, which is more friendly. But then what everyone's looking at, Jesse, is they cut ethanol demand by 100 million, which is a little bit questionable right now, maybe a little bit down, but 100 million seems a little bit strong based on the decent numbers we've seen and look for the economic recovery of the economy. But more importantly, they cut the exports by 100 million. Our export pace has been running ahead of the 5-year average. By all accounts, China's going to have to import 25 to 30 million metric tons of corn. If they have to import that much more corn, there's no other corn, Jesse, in the world to buy from but us. That means instead of lowering exports like they did, they eventually got to reverse that and raise it. So the net was the drop of the carryout down to 1.55, and the market said, wait a second, you think the carryout's going to be down to $1.550 billion? To get there, we got to ration demand. And the fact of the matter is, even though the government suggested we ration demand based on their accounting, the price isn't there enough to ration it, and hence the 25-cent move up on the corn market.
Yeah, and really that corn market just took center stage, and you hit on a lot of great points there. And I mean, thinking about all of those numbers, it really, I think everyone out there completely surprised with where this corn market headed today with that limit up move. And now, obviously, we were kind of chatting before we got on air, but now it's going to turn to a couple of things. Our acreage battle coming up this spring here in the U.S., and then ultimately, when's this rally going to end? And I think that's going to be an even bigger question as well. Watching South American weather, I just want your thoughts. I mean, corn, obviously, the ride's going to end sooner than later in all these markets. And after this report today, what are your thoughts on what we could see the rest of the week and down the road?
Well, right now, I guess we lock limit up. The synthetics suggest we're going to open a little bit higher tonight. I would guess we would open a little bit higher tonight. Then we are going to debate a little bit about the weather in South America. If they continue to have dryness issues in South America, that'll keep a bit under the market. But as you mentioned, the next big report we're going to have is the USDA outlook form, where they're going to start talking acres. And I think what you're going to see is a lot of acreage increasing in both beans and corn. We've got a drought going on, which is kind of positive and negative. The negative side is if it stays dry, we know what can happen this summer. But on the other hand, the dryness potentially means maybe we're not going to prevent plant problems we had in the last couple of years, which could bring 8-9 million acres of production back into line. So, specifically for producers, this is where we're suggesting, hey, you're looking at some phenomenal prices. Don't be afraid to reward the market, as well as new crop. You're looking at new crop corn over $4.50. You're looking at dollars that you could have only dreamed of 6 months ago. So we're encouraging people, start looking at your balance sheet. Don't look at the price, look at the revenue you're locking in. And there's multiple ways you can lock in the floors as well as keep them, upside open with options, sell cash, buy calls, maybe buy puts, maybe buy some of the shorter day puts, which put a floor in through the spring. But start to take a serious approach to what's going to happen. It is going to be a volatile market. When we jump to beans, the bean report, they raised the demand for crush. They raised the demand for exports. They did raise imports a little bit. The net, Jesse, was a carryout of 140 million bushel carryout, which is exactly what the average trade guess was. But what happened? The market exploded higher. We closed almost 50 cents higher. What's going on there? The market doesn't believe that carryout's at 140 million. The market thinks it's going to be closer to 100 million when it's all said and done. But think about this. At 140 million carryout, you're talking stocks to use at 3%. That would be the tightest ever, stocks to use. The previous 2 times we've had stocks to use about 4.5%. We got to $16 beans and $18 beans. So depending on how the weather plays out and how the acreage plays out, there's going to be a lot of volatility in this market. Not just today, not just tomorrow, but I believe all the way through the summer of 2021.
And that's something that we're definitely going to be watching. And those numbers you mentioned, I mean, yeah, these are levels and these are numbers that we haven't seen either ever before or in quite some time. Jim, I know the last week or so we've heard about a lot more sales from farmers, especially on the corn side. And if any farmers were hanging on to beans, they're probably considering maybe moving some beans now, although we know that supply is obviously much tighter. If I'm a producer, after today's numbers, after these limit higher moves, corn, beans, and like you mentioned, looking at that balance sheet, looking at some of the revenue opportunity here, I mean, is it time to really consider moving some of that crop that's sitting in the bin or looking to move some of the 21, even 22 crop?
Yes, I believe so. I mean, because I said, I'm going to go back to your dollars per acre. It's not, it's profit, not price. You want to be profitable producers. You want to guarantee a legacy. I've been telling my customers, there's not a lot of grain left to sell the 20 of this crop in the bin. A lot of people say we're down to less than 15, 20% ownership of beans by the producer, maybe 25 to 35 in the corn. That's the guesstimate. So we're starting to focus on 2021, but the higher these prices go, I think you got to look at 2022. Because one thing we know that's different than the drought year of 2012 is you got South America online. So the higher our prices go this spring and summer, the more acreage you're going to increase into our fall harvest as they start planting. So we want to encourage producers to take advantage of it. Now, we want to be pragmatic. When you're talking to stocks use at 3% on the beans, you're talking stocks use of corn that's a little over 10% right now. We believe it'll be under 10% when it's all said and done. You want to keep that top side open, but that's what the market's for. You can sell cash grain and you can buy calls. Now, calls aren't going to be cheap. There's no doubt about it. Mm-hmm. But then again, you're locking in revenue levels you haven't been able to lock in for years. So the trade-offs are there. So you can build a program right now that allows you to guarantee some phenomenal revenue, but keep your upside open in case this weather does become a problem. We just had a weather forecaster we were talking to yesterday that said, look, you look at some of these long-range models, they are actually kind of scary. They're talking kind of a warm, dry summer potentially. Now, he put the confidence kind of low. He said, hey, when you're this far out, a lot can change, but that's what they're hinting at. If we do have a production problem because of a dryness issue, you're going to want to have some upside ownership against those sales. So the way you bracket is, use options to put floors in, sell cash, use options to kind of cover that position. The board is there to manage risk. Use it, plain and simple.
Let's move over to wheat here a little bit, Jim, and talk about that. USDA left production at 1.826 billion bushels. That was unchanged from the December report, but a few other changes resulted in ending stocks below pre-report analyst expectations, down to 836 million bushels. And we saw wheat react favorably as well, up some 20 to 30 cents across Chicago KC wheat. Even spring wheat was a little bit higher on the day. What are some of your thoughts on wheat and how that fared after the report today?
Well, the chart of the wheat looks great. It broke out to the upside, especially the KC wheat. So the chart's looking pretty positive. Part of the reason why the wheat's going up is what's going on in the world competition. well, today, what's going on in Russia, the livestock producers are really putting pressure on the Russian government to raise their export tariffs even more because they're trying to ration exports out of Russia so they have feed wheat to feed their livestock. And that kind of fueled the wheat market. Wheat's going to be the follower, but it's going to be an interesting battle. I mean, if corn keeps going higher and beans keep going higher, then the debate is, do I rip my wheat up and try to plant corn next year? Then you got the drought going on in the plains. So I think all three are going to feed on each other. And there's one other thing I want to point out that we haven't talked about a little bit, Jesse. It's the macro picture. The government puts out a slide, and when you dig into the report, they essentially raise the price of pretty much all the commodities they talk about: grains, livestock, milk, the protein. Every one of those saw an increase in the price of those commodities. What that tells me is inflation is here, and it's probably going to get even more strong. And what does that do? When you've got inflation, what does that do? That brings money into the market. We had about a little less than $1 billion of spec money, hedge money into the commodities recently. At the apex of the commodity cycle, it was over 2.4 billion. So there's a lot of money that could be flowing into our market on this inflationary play. Wheat's a classic one. A lot of them like to buy because it is a food staple. So we do think the wheat market should continue to follow the wheat and corn higher.
And that'll be something to watch as well. And great that you mentioned the macro side of things, Jim, because obviously we've already seen a ton of money flow in this market, and by the sound of it, we're probably going to see even more money flow into this market with inflation on the horizon.
Definitely. I would definitely expect it. The stock market is up near the highs. If you look at the stock market money to commodities as a whole, it's a very good value. And like I said, when we're printing money, but it's not just the United States. The world is printing money. The inflationary plays there. The Fed's got a 2% target for inflation. If they got 3%, I don't think they'd complain about it near term. They've got to get that inflation to try to essentially inflate our way out of this debt crisis. So that is something that's very bullish for commodities right now. And, because what happens if you think things are going to get more expensive tomorrow, what do? You go buy it today. You go hoard it today. And I think that's partly what you saw even in the markets today. When the market came out and we didn't react to what a lot of people thought would be called a neutral bearish report, it brought money right back into the market. And I expect you'll continue to see that till the market's comfortable that we have a supply and, we have a big enough production to meet this year's demand.
And obviously with everything as well, and we touched on this, we're going to be watching that South American weather here, I think, the next month or two, because they've been dry. They've started to catch some showers, but really it's not enough for what they need to produce a strong crop in South America, Jim.
Right now, Argentina had some recent rains Sunday, Monday. They've had some recent rains, but the fact of the matter is, I think the last stat I saw, even though with those rains, they still had half the rainfall they normally have. And you think about as a producer out there, what happens when you have half the rainfall? What are the odds you're going to have trend line yields? So the odds are this crop, they did shave the crop down a little bit on the report in Argentina. I would expect that crop to get smaller as we go through their production cycle.
Jim, let's switch over to livestock and talk a little bit on the cattle market. I know we saw some beef production numbers and pork production numbers too come out today from USDA and some estimates there. But this cattle market's kind of been struggling lately now all of a sudden. We were down again today in the futures. And, we've heard people talk about, well, with higher corn prices, feed prices, where were livestock, in those years. But right now it just seems like this cattle market's taking it on the chin. Can you talk about what you're seeing there?
Well, I think there's two things that are kind of hurting the cattle market right now. First one, just frontmost, Jesse, I think is the pandemic. The reality, unfortunately, we're still dealing with a pandemic that is really limiting people feeling comfortable going out to eat. We're seeing, a lot of clampdowns, not just in the United States, in the world. And I think that's what's hurting us right now. And that's kind of limiting the cattle near term. Now, if you look back in the back months, the summer months further out, I think you'd be a little bit more optimistic. We do have the vaccines. Hopefully they get a little bit more efficient in getting it into people's arms. But by all accounts, we should see the economy grow. I know a lot of Fed officials are looking for demand to really pick up in the second half of this year. And I think as that demand picks up, that you will see support in the protein market. But right now, it's just hard to get people excited about it. Then on top of it, even if you aren't in a lockdown phase, we've had a relatively mild winter here right now, but it sounds like winter cold's really going to break free as we get to the latter half of January. So even some of these areas like in New York where they're letting people only eat outside when it gets cold, maybe you can heat out under a heat lamp. You get the bitter cold coming in, it's even going to be harder to convince people to eat outside. And I think that's also hurting us temporarily. But I think you got to be optimistic. But right now, I got to admit, it's going to be tough to be a livestock producer. The demand's a little bit questionable right now, and unfortunately, your feed costs seem to be going up daily.
Well, and another thing too with that Arctic cold we could see coming in here, what's that going to do for stress on livestock, whether it be cattle or hogs, and that's going to play into our market, I think, as well moving forward.
No doubt about it. I think the one good thing out there, it's going to get cold, but as far as I can heard, I don't think there's any major snowstorms going to hit the livestock belt. It's just going to be cold. The major snowstorms sounds like it's going to hit the East Coast, but that hurts your demand aspect with being a lot of population on that part of the country.
Yeah. And the hogs too, specifically, that $72 mark in the front month seems to have just been this brick wall we can't break through. And we're still, a couple bucks below that. But luckily, it seems like this hog market has at least found some strength to trade just kind of sideways, but it's not breaking really lower. It's just kind of hanging there. It seems like this hog market is.
It's just kind of, I think it's a good way to put it. It's more of a sideways range. I would anticipate that. We are hearing some bird flu problems in parts of Asia and Europe, and maybe that's going to bring some pork demand back into it. The dollar is kind of corrected recently, but overall the trend is down. That should give us more demand. And then the real question is the wild card for hogs is always going to be China. They are rebuilding back from that, the African swine flu. But the fact of the matter is that's not been eradicated. If you start seeing problems there again, you could start seeing that start to populate again. That could bring some demand back from our market back to China, which I think could be a little bit opportunistic. But like I said, in general, I think the hogs, just like the cattle market, I think the later we go into 2021, the little bit more optimistic I am, because I do think as a whole, the U.S. and world, they're ready to go out, spend some money, get past this pandemic, and that should be good for demand.
And I think another interesting tidbit as well with hogs, China trading hogs now, that started this week as well. So that's, again, another insight maybe into where the Chinese hog market is here moving forward, Jim.
It will be. It'll be kind of interesting. I mean, a lot of people, when we come in the morning, the traders, they look to see what happened in China on the price of corn, price of meal. It continues to go higher. I think people will start looking at it as a gauge to try to see, if the prices get too high in a little bit cleaner area to find out what the price of hogs are in China. That might be a gauge to find out, will we see some demand show up? Because the one thing we do know from the Chinese, they are just ferocious demand for commodities to feed their people. And if they can find it cheap, they will import it.
Jim, any other final thoughts? I know we've covered a lot today, a lot of news out there in the market trade. Any other final thoughts or anything else you want to reiterate?
Well, right now, I'm just going to tell the producers, it's been a phenomenal ride. When you think about where we were just in June, July, or early August, we're talking 1.7 billion corn carryout. Now you're below 1.6. We're talking to 600 million bean carryout. You're now down to 140. Enjoy it. Be happy. But the one thing I want to encourage them is also not, remember where we were a little less than a year ago, February, March. A lot of people are very optimistic on the demand side of the equation. And it kind of fell on, the world kind of got tilted sideways, and it cost a lot of people a lot of stress and money. Right now, you've got a fantastic opportunity to lock in profits and manage to keep the upside open. So, give anybody at the Ag Market team a call. Go to our website, agmarket.net. We have a great app that you can download that kind of allows you to show your break evens and profits per dollars per acre. If you have any questions, give us a call.
Agmarket.net. That's where you could find them online, and a great team there at agmarket.net as well. Jim McCormick, I appreciate the time as always. Thanks for joining us on Market Talk today.
Thank you for having me.
Jim McCormick with agmarket.net, our guest today here on Market Talk for Tuesday, January 12th. I'm your host, Jesse Allen. Have a great afternoon.